What's going on, guys? It's Mr. DEBT Joe Lorick from the Money Etiquette Group, and I really quickly want to have a conversation with you about financial advisement, the industry, where things are going, because a lot of people have been asking me, why don't you work for, like a Merrill Lynch and wealth management? So I'm going to go over my background a little bit, and then I'm going to talk to you about where things are going in that industry and why I've chosen to take the route that I've taken. A lot of people say, okay, to help people, you should go ahead and go the traditional route. You should go ahead with Ameritrade. You should go ahead with E-Trade. You should go ahead with Merrill Lynch. You should go ahead with, and people are confused about who does what. But let me just talk to you in general about the industry, okay? When it comes to financial advisement, when you take that route, you're only able to help a limited amount of people because you have to charge a certain amount of money. I'm a person that before getting in the banking industry, I always wanted to help people with financial literacy. I always wanted to help people, but I didn't know how. I didn't have all the information I needed. But to give you a little bit more of my background, about, it's 13, 14 years ago, I started in banking in the collections department, and then I learned about credit cards, and I learned about credit scores a little bit more. And then that evolved. Eventually I got into the credit department, and eventually I started dealing with more consumer loans like mortgages and auto loans and personal loans and second mortgages. And then I moved into the role as an analyst. So instead of being on the front line, I was kind of on the back line, and I understood the numbers and the information that moves banking on a national and international level. I understood risk. I understood just the banking industry and all the way down to the employment side of it. How many people we should have over here versus how many people we should have over there. How is this going to affect our books at the end of the year? How is this going to look to investors? These are things that I got experience over those 13 to 14 years. And during that time frame, I also had the opportunity to go into wealth management through Merrill Lynch, but I decided not to. And again, the reason I decided not to is because when I really looked at the industry and what they did, I didn't mind the work. I didn't mind, understanding stocks, insurance. That's all there. In fact, I got that knowledge by just studying and being connected to it. But ultimately, I saw that I couldn't help people like myself that came from lower to middle class income, that came from cities where you're not getting that much information in financial literacy in public schools. So I made a decision to write books and to help people as much as I could, which eventually turned into my business. Now, another reason that I stayed away from wealth management in this way is because I saw where things were going in terms of technology. If you look at the articles that are coming out, you're seeing it more and more each year. I mean, you can go all the way back to 2017, 2018, and you'll see several articles come out from Forbes and different financial writers talking about how the profession and the role of a financial advisor was going to be not eliminated, but changed into more of a role for artificial intelligence. And today we're seeing it more and more. We're seeing that artificial intelligence or robo-advisors are performing just as good or sometimes better than your traditional advisors. And when it comes to money like stocks and when it comes to investing, see, people look at it differently than other purchases, because technically, even though you sign up to buy something, that's a piece of paper, that's an agreement. You're not holding a percentage of a company. You can't physically hold your part of that company. You can't physically hold that stock. You hold paper. And when it comes to how people are tied to paper, it's not that much of an emotional decision. I found in this industry, some of it's emotion, but a lot of it is about where can I make money? What are things going to tell? What do the numbers tell me? What should I do? And what do I want to bet on? And personally, I'm not moved by that. And I also know that artificial intelligence can take care of that. So if, let's just say, you have to pay me a 15% commission or 15%, when it comes to artificial intelligence, you could pay them 1/5%, because it's not a person, it's not an employee, it's a function, it's an algorithm. It's something that picks up numbers and works better than most of our minds. They're always, artificial intelligence when it comes to finances will always be able to read numbers faster, find trends faster than human beings. So to me, if you know how I talk and the things that I study, always look at where things are going. And in that industry, if you are a financial advisor, understand that artificial intelligence is going to take over. It's happening now. You're going to have to find a better way to make money. And here's the other part that's a realistic part of financial advisement, okay? it's a who you know industry. I don't come from money. I don't come from a group of people who could invest 110,000, 20,000, 60,000 that just have it like that. I don't have those relationships. It's easier for a person that has those relationships than a person like myself because I don't have that, okay? Nepotism is real. Working with family and friends is real. And I don't have that. So I knew with this industry it wouldn't work for me. But again, I also saw how artificial intelligence would even replace some of that, where maybe all that remains is nepotism, because AI is going to cost less, do a better job. Now, ultimately, a lot of financial advisors are going to have to find a new way to make money off of people because bots and algorithms will do it better and cheaper. So what do you do to replace that? Now, if you know a little bit about myself, you also know that I work in the real estate industry, and people will say, well, the real estate industry is going to go the same way, but it's a little bit different. Though I do see what you're saying, because people can go today on Zillow and search for homes themselves, but there is a level of human behavior that's necessary in real estate because of the changing environment. Because when things go wrong, you need to speak to a person, and this happens on the drop of a dime. A machine or artificial intelligence can't help you in that way. When it comes to a house, you touch a house. It's not just for some people a business decision. It's an emotional decision, and you need an emotional being with you to make that decision. It's about the relationship. Now, those who form real estate deals and agreements with people based on numbers only, that they're going to suffer. But those who form it based on relationships will do well. There's still space for relationships in real estate, but in financial advisement, not so much. That's a numbers game. So that's why I haven't gone that route. I have the experience. I have the background. I don't just get on here and speak about things because I haven't done my studying, because I don't have any experience. I'm not just talking because it's the next internet craze. No, I've always been online and offline a person that helps people. And that's what I'm interested in. So to answer some of you guys' questions, I'm not going to be your financial advisor because I'm not going to take that much money from you. That's not how I make my money. I'm not going to also spend so much time with an individual that I can't help as many people as possible. Not at this stage. Because it goes against what I want to do with my core principle, which is help people reach financial freedom. I don't want to handicap them with my service or with help. I want to make sure they get to where they want to get. And that doesn't mean they're going to make 50,000 or 60,000. It's whatever they can do within their means that helps them reach their goal. That's what I'm here for. Not to just make a quick buck or to make 100, 200, 300 an hour off of your portfolio. Not to make a percentage off of your portfolio. No, that's cool. I'm not knocking that. But what I am saying is that's not me, and the industry is going to show that that's not the route to make long-term money anymore, and you're going to have to change if you do that because the bots and AI, they're here. Algorithms are taking over. People were trying to beat the market with algorithms in the 80s. And now people have perfected that craft. The algorithms are much better. The bots, the AI, they're doing well. So that's where that industry is headed. That's also why when you see companies like E-Trade and Robinhood and those who have a big online, even I would say Ameritrade too, but a big online presence that let you handle your trading yourself and then offers you some help through advisors. Their advisors will be robo-advisors too because it's more on demand. It's 24/7. You could ask a robo-advisor at midnight, 1 o'clock in the morning, what to do, and they're going to answer you. That's where things are going. So when it comes to me as an investor, I will be invested in the companies and the wealth management companies that go in that direction. But me personally, that's why I'm not in that part of wealth management, because I see where things are going. But you guys can let me know what you think. Do you think it's real or not? Do you think that, the industry is going to be okay, that it's not going to transform? Maybe I'm tripping. I'm willing to admit when I'm wrong or I don't see things the right way. So you guys let me know in the comment section what you think.